Good afternoon. Welcome to daily currency update from the currency desk. What is today's scenario is that for the past 2 days we have seen the rupee remain quite volatile against the dollar. On Monday we witnessed a major appreciation in the rupee against the dollar, and we saw it appreciate by more than 1%, which is quite exceptional for a intraday move. And then again on the next day, that is Tuesday, what we witnessed is rupee reversing or losing 50% of its gains from the previous day, and on Tuesday it had closed on 53.12 in the spot market. What we witnessed today is a 40 paise gap up opening, and this has caused the rupee to depreciate. What we are witnessing is, from the past few days there are many rumors about the RBI trying to sell dollars and help support the rupee against a major fall. This has not yet been validated, and the only official data from RBI would be released 2 months from date. So right now we can only keep guessing when RBI will intervene or it won't. In the international front, we have the USD index crossing above 80 and being up by 0.16%. This is expected to support the dollar for a major up move against the rupee. Again, what we have is the oil prices in the international market, that is the crude oil prices, have fallen a bit. This again would support the rupee against major depreciation. So in short, what we have today is that the dollar is expected to appreciate further against the rupee, but at the same time oil prices are expected to support the rupee. What we technically recommend is sell at current levels and keep a near term target of 52.67 in the spot. Coming to the European scenario, what we have seen is that the Greece and the French politics have created a very cloudy environment around what will be the next decision as regards to the austerity measures. As we all know, the austerity measures are crucial for the bailout package. Without the austerity measures, the bailout packages won't be of much use. We have the opposition parties in Greece and France going against the austerity measures, and in Greece there are even talks of reversing the bailout package or revoking the bailout package. On the hindsight, we have some positive data from the German economy. Its IIP data was better than expected, but again only on the basis of German strong data we won't have much positive movement in the euro. In the euro against the dollar, what we have seen in the international markets is that it has fallen below 1.30 levels. This is considered to be a major level or a very crucial level for the euro. So we will see more fall in the euro against the Indian rupee also. There are rumors about the eurozone going for a breakup, probably a breakdown, wherein Greece or a few other countries would prefer to separate themselves from the euro. But right now such things are just a distant possibilities or just rumors. In the US, the quantitative easing expectations are pegged in the July month. So what we are looking at is the operation twist that is currently going on in the US would come to an end in July, and when this comes to an end, due to the persistent weakness in the US economy, what we will see is that the dollar, the US Federal Reserve would opt for a quantitative easing. In case of euro, what we recommend at current levels is sell with a target of 68.61 in the spot. In the UK economy, Bank of England is expected to opt for quantitative easing. This is mainly due to the growth concerns in the economy. We have witnessed lots and lots of weak economic data from the UK. This has provoked investors to create expectations of another round of quantitative easing, which we'll have to wait and see if Bank of England builds up or acts upon. In case of pound, we recommend sell on rise with a target of 85.17 and keep a strict stop loss at 86.68. In case of the Japanese yen, we expect it to strengthen at a greater pace than the dollar on safe haven demand, as we have earlier emphasized. But what could be a downside for the yen is the trade balance figures. If the trade balance figures are not as per expectations, that is, if the deficit is not reduced, then it could be worse for the yen and we could witness another depreciation in the yen. But right now, in the international markets, that is against dollar, the yen is expected to fall below 80 levels, that is appreciate below 80, and this will help it strengthen further in the near term. In Japanese yen against the Indian rupee, we recommend to hold short positions with a stop loss of 67.40, and if we have a strong up move above 67.40 which is sustained on a closing basis, then we can have long positions initiated from those levels. Thank you.